So looking at the latest data and technical formation, it looks like Dogecoin and its holders are in for a real treat. So let's take a look at it. Dogecoin's latest technical formation forecasts a 68% upswing to 23.5 cents. This is determined by adding the distance between the first swing high and swing low to the breakout point. Although Dogecoin sliced through the upper trend line at roughly 14 cents on 26 April, it needs to be validated on the weekly chart. Doing so will indicate that the uptrend has begun. A secondary confirmation will arrive if and after Dogecoin flips the 16 cents hurdle into a support floor. In such a case, investors can accumulate Dogecoin and ride the wave that retests the forecasted target at 23.5 cents. Adding a tailwind to this bullish outlook for Doge is the 365-day market value to realized value model. If you don't know, this indicator is used to measure the average profit or loss of investors that purchased Doge tokens over the past year. A value between minus 10% to minus 15% indicates that short-term holders are at a loss. Now the thing is that long-term holders tend to accumulate under these conditions and form local bottoms. Therefore, the said range is termed an opportunity zone. And for Dogecoin, the 365-day MVRV is hovering around minus 38%, which indicates that there is a major chance for trend reversal. And I think it's highly possible because of all the good news that's been coming out for Dogecoin. So Shiba Inu and Dogecoin were recently accepted by another global real estate giant. This giant is called Jamestown, and they said that they are willing to accept rent in crypto for their US-based real estate. Because of things like this, the real-world utility of cryptos like Shiba Inu and Dogecoin increased exponentially. This is mass adoption happening for the meme coins that no one believed in. Now before I talk more about Doge adoption and analysis, let's look at some more news about crypto adoption. Damac Properties, which is a prominent real estate developer based in Dubai, has announced that it would begin taking Bitcoin and ETH payments for its luxury properties. Damac has also announced intentions to invest up to $100 million in its latest project, which would focus on the development of digital cities. And obviously, spending in these digital cities will be done with cryptos like Dogecoin and other meta coins. Another big news from today was that anyone can now use a bot to buy Bitcoin and Toncoin within the Telegram app. If you don't know, Telegram is a communications app just like WhatsApp. And because of this, sending cryptos will be as efficient and easy as sending a text message. Moving on, another big news came from BlackRock. So BlackRock has launched a blockchain ETF that will offer investors exposure to the crypto sector. The fund will give investors exposure to companies that are involved in the development, innovation, and utilization of blockchain and crypto technologies. While it won't directly invest in crypto, it's still like BlackRock saying that it really believes in the future of cryptos. Its CEO also said that BlackRock is studying digital currencies, stablecoins, and the underlying technologies to understand how they can help us serve our clients. Moving on, another great news came from Panama, the latest city that has approved a bill regulating the use of Bitcoin and cryptos as payment. And I think it's absolutely the best step they could have taken right now. Over 50% of Panama's population doesn't have a bank account, and a move like this is going to help localities receive payments from tourists that come to Panama. Now let's talk about some more predictions and analyses for Dogecoin and cryptos. So the CoinMarketCap crypto community is projecting that Dogecoin will trade at an average of 15.4 cents by the end of May 2022. And this is pretty significant because it is one of the only crypto communities with over 70% historical accuracy. So I think 15.4 cents is a level we need to look out for. Now let's move on to Bitcoin. There's one chart for Bitcoin that suggests that it will outperform tech stocks later this year. So the valuation of Bitcoin against the Nasdaq actually shows it's above some of its shorter-term moving averages. It also seems like the Bitcoin valuation against the Nasdaq is building up to something. The window that it's moving between is getting smaller as time goes on. And if you extend this out, you can see that they will ultimately converge by the beginning of 2023. Also, if you noticed, Bitcoin has been putting in higher lows and lower highs against the Nasdaq since late 2020. The popular analyst Cowen said that Bitcoin is more likely to break up against the Nasdaq than down. He based that prediction on Bitcoin's massive historical gains against the index. Do you think it's possible? Let me know in the comment section below. Now let's move on to market sentiment. According to a survey conducted by global cryptocurrency exchange Bitstamp, 80% of institutional investors believe that Bitcoin would eventually displace traditional investment vehicles. Additionally, 70% of institutional investors rated cryptocurrency as a trustworthy investment, with 68% actively recommending it in investment schemes. The research included 23 global markets and surveyed over 23,000 retail investors as well as 5,500 institutional investors in order to provide a fair representation of data and insights about virtual currencies. Also, according to this poll, investors are confident that digital assets would eventually outperform traditional investing over the next decade. Within a decade, mainstream adoption could accelerate to the point where it becomes the new normal. The survey also said that around 80% of institutional investors have a favorable attitude regarding cryptocurrencies as an asset class. Also, 66% of regular investors expressed confidence in these as an asset class. And then there was the Shark Tank star Kevin O'Leary, who projected that institutional investors would pour trillions of dollars into crypto. He said that crypto will eventually become S&P's 12th sector. So as you can see, institutions are highly optimistic about Bitcoin, and so are the whales. It says here that Bitcoin whale holdings have hit a 7-month high. The whales have been accumulating heavily around the 33K mark. Market analyst Will Clement said that the whales holdings are now the highest in September of last year. But at the same time, panic selling by retail investors might trigger uncertainty in the crypto market. The on-chain analysis suggests that the number of unique addresses holding at least 10K Bitcoin has been increasing on this recent retrace. Whales are accumulating while retail investors are panicking. About this, Rect Capital said that Bitcoin is forming a spinning top candle at the higher low. Spinning top candlesticks signal uncertainty in the market, but also tends to precede trend reversals. Candles could change until the weekly close, but worth paying attention to the developing psychology. Also, according to market analyst Michael Vandepop, when it comes to a potential Bitcoin reversal or breakout of this structure, we need a weak dollar to act. In that case, the DXY is approaching key levels with those previous highs. And then there was on-chain analysis platform WhaleMap that said that many investors should enter the market at the 27K Max Payne Bitcoin price. He said that this is the ultimate buy-to-dip opportunity. According to the map, Bitcoin's realized price shows at what price each Bitcoin last moved, making $25,000 to $27,000 a key interchange point for buyers and sellers alike. Also, data from on-chain analytics firms Glassnode and CryptoQuant shows that not only has the trend of Bitcoin leaving exchanges accelerated, but reached levels rarely seen. Now, look at this chart from Glassnode's exchange net position change figures. Basically, the 30-day change in the Bitcoin exchange balance is hitting negative levels, and that is something we've only seen a handful of times in the last 2 years. Moving on, another analysis came from Glassnode. It says that Bitcoin is 40% down from its all-time highs, but on-chain analysts say it's starting to bottom out. According to Glassnode, the current open interest in perpetual swaps is equivalent to 1.3% of the Bitcoin market cap, which is approaching historically high levels. Moving away from derivatives markets, positive signs for the future of Bitcoin can be found by digging deeper into on-chain volume data. So beginning in October 2020, the percentage of transactions greater than $10 million has increased from 10% of transfer volume on a good day to an average daily dominance of 40% currently. According to Glassnode, this points to significant growth in value settlement by institutional-sized investment/trading entities, custodians, and high-net-worth individuals. Also, both the 28-day and 90-day NVT models are starting to bottom out and potentially reverse, with the 28-day breaking above the 90-day, which has historically been a constructive medium to long-term signal. And according to CryptoQuant, there seem to be some similarities between the current market trend and that during the summer of 2020. Here is a chart that shows the trend in the Bitcoin exchange supply-shock ratio over the past couple of years. In this graph, the quant has marked the relevant trends of similarity between the Bitcoin markets of summer of 2020 and of right now. It looks like during both periods, the price was trending down or moving sideways, while the exchange supply-shock ratio had been rapidly going up. What followed a few months after the summer of 2020 was the start of a new Bitcoin bull run due to the resulting supply shock. The thing is that Bitcoin's price is heavily tied to the stock market currently, and the analyst believes it's possible that once it decouples, a similar shock could be there this time as well. Now coming back to Dogecoin, popular analyst Altcoin Sherpa said that Dogecoin could present interesting trade opportunities as the process to buy Twitter plays out. He said that, "I'm not expecting a sustained Dogecoin rally for a bit, but in my opinion, Dogecoin usually goes strongly when retail starts to pile in, marking close to the end of a cycle. That said, Elon Musk buying Twitter might create some interesting trade opportunities. I expect this to mainly chop and accumulate for now with some crazy Elon Musk spikes in between." If we look at the current price of Dogecoin, we could say that things are still looking positive. Over 55% of holders are still in profit, and Dogecoin still has 3 bullish signals. Do you think Doge can hit 16 cents by the end of this week? Let me know in the comment section below.